Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Makshi Doria and with me is Vivek Iyer. Vivek, after the fabulous rally that we saw yesterday, the market seemed to have now taken a breather, but the broader end of the market, that continues to do well. Both the mid-cap as well as small-cap index are building onto the gains that they saw yesterday.
That's right. Good afternoon, Vamakshi. So that's the good part as far as today's session is concerned. We're starting mid-cap radar, and the mid-cap and small-cap end of the markets continue to hold steady in the green, building on, as Vamakshi just mentioned, to the gains that they've seen in the last couple of trading sessions. What's doing well? Well, the defense pack is doing very well. Pharma pack is doing quite well. On the other hand, quite a few other sectors are seeing a bit of slip. We have quite a lot lined up on the show. Let's start off with the top headlines. Stocks slip as investors remain uneasy about the US-China interim trade arrangement and its implications for India. Caution over the India-Pakistan conflict also lingers. Pharma and PSU banks are the big gainers, while IT and realty caps surge.
The US order on drugs calls for setting prices at most favored nation levels only for direct purchases by patients from manufacturers, significantly diluting terms of the original draft and propping stocks.
Block deals seem to be making a comeback with some cheer in the market. Paytm sees a trade of 4% of its equity, while KFin has 10% of its equity change hands.
Care Ratings and Zaggle Prepaid gain post their Q4 numbers. Care Ratings saw its EBITDA surge by 65%, while Zaggle Prepaid saw its revenue rise 51% on a year-on-year basis.
Ahead of MSCI Global Standard Index reject slated tomorrow, Coromandel International, Nykaa and Paytm are in focus as they are likely to be included in the index. On the other hand, Thermax could be excluded in the MSCI reject.
Well, it's a 300-point cut as far as the Nifty is concerned. It's trading close to the day's lowest point. The advance decline ratio, though, is in favor of the advances. It's an advance decline ratio of almost 2:1. So that bodes well for the broader indices. And the mid-cap index is well reflecting that, up nearly 0.2%. As far as some sectoral indices are concerned, most of them are trading in the red. Yesterday, IT was the top sectoral gainer. But in today's trading session, it is the top sectoral loser, down almost 2%. On the flip side, when we look at the PSU bank space, barring SBI as well as Bank of Maharashtra, all of the PSU counters are surging higher in trade. Look at the move on Canara Bank as well as Bank of India. Both of these counters are trading with gains upwards of 3%. But apart from this list, we have a lot more lined up. In our special segment, Midcap Movers, we now have Hormas to take us through the midcaps that are moving around in trade. Hormas?
After you see a session like that we saw yesterday, it's only par for the course that you see some bit of profit booking off the table. But you can't, of course, take your eyes off the defense names. They're seeing profit booking all across, but defense stocks continue to move higher. And take a look at Bharat Dynamics now at the highest point of the day, 10% higher for that stock. Zen Technologies, another 5% upper circuit. HAL will be reporting results soon, 4% higher on that stock. And Data Patterns too has surged to the highest point of the day, 4% higher on that name as well. Now, some of the others that are moving around in terms of newsmakers today, look at the recovery that you've seen in Swiggy after its shareholder lock-in came to an end. The stock at one point was down 7%, has narrowed its losses now down to just 2%. KFin saw a recovery as well, but that recovery has been sold into after the block deal, 5% lower on that stock. UPL, the street seems to be divided on its prospects, 5% lower on that stock as well. And IIFL Finance, after the upgrade that came in from HSBC earlier in the day, is trading with gains of around 5%. And to move on, and you see PSU banks, which is the top sectoral gainer in today's session, be it Canara Bank, Bank of India, after the management spoke to us, focusing on recoveries of around 11,000 crores this year. Bank of Baroda too, seeing some gains in today's session. And some of the other earnings reactions, if you could pull them up, and you see JM Financial off the highs of the day, still holding on to gains of around 3%. But Tanla Platforms, the top gainer on the Nifty 500, and Jyoti Laboratories was down yesterday and is extending its losses in today's session, 4.5% lower there as well. And lastly, some of the movers on the volumes front, Sagility is another upper circuit today for 5%. Afcons Infra and Star Health is 6.5% higher at the highest point of the day on very strong volumes. Back to you guys.
Thank you so much, Hormas, for joining us, giving us a sense of the list of stocks that are buzzing as far as the broader end of the markets are concerned. Well, moving on, Somil Mehta from Mirae Asset Sharekhan joins us for a quick technical check on the market. Thank you so much, Somil, for joining us. First up, your view on the Nifty, and do you think the broader market outperformance that we are seeing today can continue from here on as well?
Sure. I think the broader market is much more stronger from here, and I think the overall trend will remain positive in the short term, in the medium term outlook, and the broader markets are looking stronger. Nifty overall is correcting a little bit. Never did not expect this sharp of a correction in the very short term, but 24,600 will remain a very, very crucial support, as it was a resistance previously, because there was a range between 24,600 and 24,000, and that range we broke on the upside yesterday, and it was an excellent rise yesterday. So I think the medium-term outlook still remains positive, and the upper end of the Bollinger Band on the daily charts will be the target, which is 25,200, 25,300 levels. So that would be the short-term target for Nifty. In Bank Nifty, same. I think this range is broken on the upside, and we can see the outperformance very soon. I think it will outperform, and the targets would be close to 57,000 levels in Bank Nifty. Of course, the support would be 53,490. That will be a very, very crucial support for Bank Nifty, but Bank Nifty should outperform.
Well, thank you so much for that, Somil. But, this is Vamakshi joining in. And in such a market, what would be your top stock recommendations?
PSU banks are doing great. I think autos would do good very soon, but my stocks would be from pharma. First one would be Lupin. Stop loss would be 2,000 and the target would be 2225. A small triangle pattern has broken on the upside, high top, high bottom formation already. So a good buy stock for a positional view as well. The second would be Policy Bazaar. It's a mid-cap stock, very high beta stock, so the stop loss should be very strict. The stop loss would be 1650 and the target would be 1845.
Thank you so much, Somil, for joining us, giving us a sense of market levels as well as your individual stock picks for the day. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Now you believe that India has been poised to have its crossover or breakout moment, just as we've seen with the Parasite and so on and so forth. Why has it been so elusive?
Because we've been victims of our own success in a way that traditionally India has never really had to reach out to the world.
What's exciting you about the stuff that you're seeing being made today?
A show like Kohra, for example, right? It's very local, very rooted. But I think the beats of the way that the story unfolds is told in a very international way.
Are you also seeing a diversity from where these scripts are coming in?
I think the number of people from the smaller towns, I'd say even sometimes from villages, who reach out to us with, even if it's a concept note, it might not be a full screenplay, is quite significant.
Welcome back to Midcap Radar. Well, as you can see on the bottom of your screen, pharma major Cipla has just declared its Q4 FY25 numbers. Revenues coming in largely in line, a slight beat to what the CNBC-TV18 poll was anticipating. The CNBC-TV18 poll had pegged the revenues coming in at close to 6,700 crore. The EBITDA, as you can see on the bottom of your screen, appears to be a slight miss, 1,537 crore versus our expectation, or the CNBC-TV18 poll expectation, of close to 1,582 crore. We are still awaiting the PAT figures. I believe the PAT figures have come in at close to 1,214 crore. While we are just standing by for Ekta to join us with her first cut as far as the results are Cipla of concern, we are looking at what the EBITDA margin figures are. The EBITDA has come in at 1,500. Well, margins at 22.84%. versus the CNBC-TV18 poll of close to 24%, which is what you can see on the bottom of your screen. The stock largely flat, has cooled off a little bit from the day's highest point. What we are still awaiting is, number one, the breakup as far as the domestic sales business and the international or the US business is concerned. The US business, as Ekta had mentioned in her preview, was expected to decline on a year-on-year base. There were multiple factors. Now, as soon as Ekta is ready, we'll just go across to her as well. Ekta, can we come across to you now?
Well, yes, absolutely. Well, it seems as though there's, a little bit of a margin disappointment which has come through for Cipla this quarter. As you can see, the margins have come in at around 22% versus an expectation of around 24%. EBITDA on, coming at around 1,537 odd crores. This time round versus an expectation of around 1,582 odd crores. Well, we wait by to see what the domestic sales growth has also been for Cipla, because that is expected to be around 9 to 11 odd %. The US, like I mentioned, could probably decline, and like Vivek was saying, could probably decline around 3 to 4% on a sequential basis. So that could be something which the street would watch out for. Net profit, I'd really like to see what's below the margin level, because the margins have come in, maybe there is another income element or something that we need to watch out for. Revenue has come in just a little higher than what the expectation was. We were working with around 6,700 odd crores. We've come in at around 6,700 plus. So we'll just wait by for the revenue to come through again. But nonetheless, I would just like to see what the P&L looks like in terms of a more detailed form post the EBITDA, as well as maybe with an other income element overall. For Cipla, lanreotide in the US market, there could have been a little bit of a decline in terms of sales in lanreotide. Revlimid, what they've done this quarter would be important to watch. And, what they are probably guiding for in the coming couple of months with regards to a couple of key drugs in the US would be something that the street would be looking out for. As of now, revenue up around 9 odd %, that's in line. The EBITDA up around 17 odd %, that's a little lower than what the expectation is. And we'll wait by for what has propelled the profit this time. Maybe post the EBITDA. Vivek, any more details on that?
Just waiting for the PPT. The PPT is not yet uploaded. I think, Cipla has actually made a habit of going ahead and surprising positively as far as EBITDA margins are concerned. That hasn't transpired this time around, but we'll wait by in case we get any more details. For the time being, what we'll do is we'll have a quick look at what MSCI as well as FTSE are they will be coming out with their index reviews later this month. In fact, MSCI will come out with its list tomorrow itself. So post-market hours tomorrow, we will expect the MSCI rejig. So what are the expectations as far as the MSCI Global Standard Index is concerned? We are expecting 3 stocks to go into the MSCI. So Nykaa, Coromandel, as well as Paytm are the 3 stocks that are expected to enter the MSCI in this particular rejig. But on the other hand, with Coromandel actually seeing the majority of the flows of close to a little over $200 million, on the other hand, Thermax is the stock that is actually expected to see a bit of a decline. We are also expecting to see later this year both FTSE as well as Sensex, those indices too will see a rejig. When it comes to FTSE, 5 inclusions are expected. May 23rd is when that particular date is. So Hyundai Motors, Vishal Mega Mart, NTPC Green Energy, Swiggy as well as Wari Energies are the stocks likely to enter the FTSE as far as May 23rd is not concerned. And Hyundai Motors is the stock that is expected to see maximum inflows of a little over $131 million. Now coming to the Sensex, May 23rd is when that particular rejig will be announced. Bharat Electronics, $275 million. Bharat Electronics and Trent could enter the Sensex, and this would be at the expense of both Nestle as well as IndusInd Bank. So a lot of key passive indices rejig is what we are looking out for. And on the back of that, there will be quite a lot of inflows and outflows that we will be looking at. MSCI, the closest one, Vamakshi.
Well, absolutely. All of these, names will be in focus over the course of the next few days. But, let's focus in on one stock that has declared its numbers post-market hours yesterday. The stock is GM Financial. When you look at the revenue from operations, that has dipped by almost 9% quarter on quarter. Total operating expenses on the flip side have declined much more significantly, down nearly 15%. Resultantly, when we look at the EBITDA margins, they have improved by almost 274 basis points. The EBITDA overall, given the kind of decline that we saw in the revenue, saw a dip of almost 4%. But nevertheless, when we look at the other income, that has propped up by almost 62%. Given that, net profit has come in flat at 209 odd crores. Let's also look at how the different segments for the company performed. As far as investment bank is concerned, they saw a dip of almost 12% out here. Alternative and distressed credit also saw a very sharp knock, down nearly 29% sequentially. Mortgage lending was also down nearly 8%. On the flip side, AMC, Wealth Management and Securities, did quite well. As far as profitability is concerned, we saw a dip in the margins for investment bank, down nearly 690 basis points. Mortgage lending too was, saw an uptick of almost 2,460 basis points. And the management in its commentary said that ECM activity was the lowest seen in the last 4 quarters. The pipeline, to be executed was delayed, but however, they're penciling in an improvement in the first quarter. They're expecting break even in the asset management business in FY27. So resultantly, it's a good set as far as the operational performance of the company is concerned. GM Financial up in trade as of now has cooled off from the highs, but nevertheless up in trade.
That's right, cooled off a little bit. But Ekta has had a chance to look through the internals of Cipla. A couple of key points that she's noted. Ekta, over to you once again.
Well, I just want to point out why the profit is higher despite, the margins in fact being in line or a little lower than estimates, is because there is an other income which is higher and the taxes outflow is lower this quarter. So the other income is coming at around 289.46 crores. It's higher versus the 249 crores same time last year and versus 221 crores last quarter. And if you just look at the tax outflow, it's 279 crores versus 324 crores year on year and versus 332 crores Q on Q. So that is basically the picture for Cipla. Revenue marginally better than estimates. Operationally, a little bit of a miss, and then you have the profitability, which is higher because of a lower tax outflow.
Well, thank you so much for that, Ekta. Quite helpful insights coming in for you as far as Cipla is concerned. That stock taking a knock in trade today as of now. But on that note, let's slip into a very short break. The management of NIIT joins us next to discuss their Q4 numbers and more. Welcome back. You're watching Midcap Radar on CNBC-TV18. Well, we have a couple of stocks in focus on the back of their numbers. Care Ratings saw an uptick of almost 12%. Another stock that is in focus on the back of its numbers is NIIT. Vijay K. Tandani, Vice Chairman and Managing Director, joins us now after the numbers. Well, good afternoon to you, Vijay. Let me first start off by understanding, Q4, we saw some muted performance come through. Revenue was down almost 12% on a quarter-on-quarter basis. The net profit too, saw a downtick of almost 1.5%. So what is your outlook going forward into FY26? And if you can explain the muted performance that came in the last quarter.
Right. So first of all, I think thanks for raising that question. You saved me the trouble of explaining it. The quarter 4 is a seasonally weak quarter. If you see in the previous years also, last year, for example, quarter 4 was 13% lower than the previous quarter. This year it is 12% lower. In fact, if you look at it, the performance is to be looked at on a year-on-year basis for seasonal businesses. So, as a seasonal business, year-on-year, Q4 performance has grown 16% year-on-year. And in the profit after tax, which is the other one which you referred to as a parameter, that has gone up 18% year-on-year. Having said that, Q4 does have a little bit of slowness, because if you see our overall annual performance, which is also the last quarter of the year, we've grown 18% year-on-year, and the profit after tax has grown 20% year-on-year. This has been because of the business uncertainty in the economic environment, as well as which led to hiring freeze in the beginning part of the year, which is now beginning to open up. So we started with a very strong BFSI performance, which is what caused the growth in the first 2 or 3 quarters. And then in the third and fourth quarter, I think there was a tapering of BFSI growth given the economic uncertainty, but meanwhile, technology has picked up. And that's what overall has resulted in an annual growth of 18% in revenue and a 20% increase in profit after tax. I also want to mention we are in an investment cycle. We have been saying this in the past. So to that extent, our EBITDA does not reflect the overall EBITDA of individual businesses, because some of the businesses we are still in an investment cycle.
So 18% growth in your top line, 20% growth in your net profit. But what's the guidance for FY26, sir?
Well, I'm sure we will do better.
All right. And how much better would that be, if you can just give us a range in terms of revenue as well as net profit?
I think given the uncertainty in the environment, the very fact that one can say better and grow better than 18% year on year, I think is quite significant. And the reason I'm again saying is that the investments that we have made so far, those are helping out. And we do believe that we can take advantage of those. We also have a new member in the family. We just did an acquisition of a very interesting company. It's called IMNEO. And IMNEO brings a missing piece in our puzzle in many ways in terms of the offerings that we had for our target customers. It's an AI-powered deep skilling SaaS platform, which will get very well integrated with everything that we offer to our customers in every part of our business, whether it is enterprise or consumer. And I think it will also open our minds, or open the doors for the higher education segment, which at this point of time is given the NEP wanting to integrate very strongly with the skilling space. So I think bringing skilling and higher education, IMNEO will also help us create that bridge. So we are very excited about the acquisition, and I think all that will also contribute to the growth that we have looking forward for the next year.
Right. Mr. Tharani, just to push you a little bit further, you said you will do better than the 18% growth as far as top line is concerned for FY26. On the bottom line, are you expecting to do better? And as far as EBITDA margins are concerned, will you be at the same range at FY25? Can you give us at least a ballpark figure as far as FY26 is concerned?
I think at this point of time, EBITDA numbers, we are still in this year, coming year, we will still remain in an investment cycle, which will remain calibrated. So to that extent, EBITDA percentages will remain in the same range that we have done this year. So we shouldn't expect anything better as far as that is concerned, as long as the overall growth picks up the way we are looking at. And we also want to make sure that the business overall remains profitable and continues to grow very fast.
Well, thank you so much for that, Mr. Tharani. It's a pleasure talking to you right after your numbers. Wishing you luck for the quarters ahead. But on that note, that's all we have on Midcap Radar from Vivek, me and everyone who put this show together. Thank you so much for tuning in. But don't go anywhere, because MF Corner comes up next.